Hello, nice to meet you. This is Kim Ki-hyun from Richgo. Today I have a special guest with me. We have Dr. Hong Chun-ho, a best-selling author from Prism Investment Advisory, with us. Nice to meet you. Hello, have you been well? Yes, I have been doing well. Do I need to explain about Dr. Hong Chun-ho separately? Many of you may already be familiar with this, and now I have a reason for inviting Dr. Hong Chun-ho here. I have had a long-standing relationship with Dr. Hong, who is a top expert in asset allocation. Given the current situation in the financial and real estate markets, there are many discussions about an economic downturn. I want to find solutions on how to safely manage my assets while still achieving some level of profit. That is why I invited Dr. Hong today, to help many people with his insights. Dr. Hong, please share your valuable knowledge with us.
Thank you for the great opportunity. Recently, the financial market has been very volatile, and especially in early August, there was a tremendous stock market crash. It seems that when the stock market drops more than 10% in a day, investors keep trying to predict the future while witnessing such a decline. However, if we were to predict the future and sell stocks, we should have sold around early July, but after the crash, everyone tends to sell. That's just human nature. On August 5th, the day of the stock market crash, we at Prism Investment Advisory sent a signal to our clients to rebalance, meaning to sell dollars and buy South Korean stocks. At that time, we received a lot of calls and inquiries. Oh, really? So our asset allocation products at Prism Investment Advisory tend to have some support during recessions or significant stock market crashes. That's correct. Within that support, we have managed to endure well. And now we are signaling to take advantage of this opportunity for some bargain buying. However, Dr. Hong, many people are asking whether it is the right thing to buy in such a situation, especially when we cannot confirm the trend or predict how the economy will unfold. I noticed that even among our clients at Prism Investment Advisory, who are quite knowledgeable about investment and asset allocation, there are those who wonder, is this the right time to buy stocks? Isn't this just foolish?
Personally, I am involved in a pension savings business where I receive tax deduction benefits through Prism Investment Advisory. I noticed the rebalancing signals during that time, and I thought it was a great opportunity for rebalancing, especially since there was an unexpected and rapid market crash that no one could have predicted. In a way, I believe that is truly the right time for rebalancing. Additionally, I hope many people can break free from the illusion surrounding stocks. I too have not been investing in stocks much since my 30s, and just yesterday I checked a friend's account, which was quite heartbreaking, wasn't it? This is not a small amount of money, and the average return is over minus 50%. Unbelievable. But the stock market hasn't actually been that bad all this time, right? Yes, it was good. However, when it goes up, people buy, and when it goes down, they sell out of fear. They end up buying in a panic and selling in fear, which means that, in a way, the overall increase in the composite stock price index hasn't translated into good returns.
I also meet a lot of clients, so especially after operating for about a year and a half, we've seen some results and word of mouth is spreading. And now we are starting to attract really affluent clients. When they share their concerns, they often show me their portfolios and I apologize, but they all look the same. The reason for their significant losses is that they tend to sell their profitable investments too early while holding onto their losing ones, which results in poor overall performance. When the market is rising, they get excited about making 10% or 20% profits and sell everything, but they end up stuck with the stocks that are underperforming, thinking they will eventually recover. They become like submarines, unable to surface as the prices they bought at never recover. This situation is quite common in the investment world. For instance, the company that Kim Jae-won mentioned, which is down 50%, doesn't mean that all their trades resulted in a 50% loss. It means they are only holding onto the ones that are down 50%. If they had cut their losses earlier, they might have done better, but it's really difficult to do that.
So I actually had a lot of interest in stock investment when I was younger, but I realized that I am not suited for it. When a small amount of money is invested, I don't care what happens. But as the assets grow to a certain extent, watching the fluctuations in the stock market makes it hard to concentrate. However, I ended up researching real estate, and I resonate deeply with the philosophy of Dr. Hong Chun-ho regarding financial asset management. We shouldn't try to predict anything or put all our money into a single asset. Instead, we should appropriately mix various assets for management. I have tried this myself, and I was very surprised as a client to see the returns. Yes, I am in the conservative category, but the returns have been quite good. In the past year, especially those who joined around this time last year have had the best returns. And I noticed that the numbers in front of them were all different.
So, I can't provide specific numbers or details, but our clients have verified everything on my blog and elsewhere, and since I'm introducing it, you should be able to see the numbers. The reason why clients who signed up last year, especially around this time, did well is that when the secondary battery market experienced a significant crash, starting at the end of July, they might remember how drastically it fell. Since then, stocks have plummeted by a third, and just a month later, in October, the Israel-Hamas war broke out. It has already been almost a year. Watching thousands of Israeli citizens being killed or kidnapped, I now feel that it is over. The financial market is finished now. We can no longer expect to see the good times of the past repeated. We are now in a bear market. When investors feel this atmosphere, they think that if they just invest a little more conservatively, they can achieve stable results. Those who entered the market in September and October have recently seen the best returns. It's really impossible to align your direction when investing, but investing during a recession or when concerns about a recession are very high can be beneficial. The most important thing in wealth management is to buy low. That's right. Buying low is the most important thing. So at the beginning of July, we were making such good profits that it was actually a bit scary. And now it's been 3 months, in August and September. It's already been about 3 months of adjustment, but fortunately, I've managed to handle the losses well from the peak. Investors seem to be quite troubled in a situation where the stock market in South Korea has fallen below 2,500. And such chaotic conditions have emerged. Some people are suggesting that it might be a good time to invest. We often tell them that the most challenging part was at the beginning, and now we have already made significant profits, but we have not incurred any losses. This surprises them, right? They often ask how we manage to avoid losses. Since our clients are well aware, we actually have less than 10% exposure to South Korean stocks. Oh, really? If you just put your hand in without checking your account and focus on balancing, you can make a profit. However, we are not fundamentally optimistic about South Korean stocks. That's right. These days, there are many issues with the capital gains tax. The capital gains tax issue is currently the biggest concern. Furthermore, when implementing tax increases like the financial investment income tax, it is essential to create an environment where people can earn money before collecting taxes. However, with everyone facing losses, it raises the question of why there is a push for tax collection. Since last year, there has been talk of value up, but what has actually improved? The value of the stock market hasn't increased, and it seems like our asset market in South Korea is being penalized. While there are certainly individuals who make good money, they are a minority, and most investors are currently experiencing losses. This focus on tax increases has led to lower profit expectations, especially since the South Korean stock market is highly volatile. Recently, when the market was around 2,900, it was a good time to sell, and now that it has dropped below 2,500, it presents a good buying opportunity. Therefore, we should not go all in on our market. From an overall asset allocation perspective, South Korea's market holds a very small share in the global stock market. If one tries to time the market based solely on South Korean stock prices, it may not align with our investment philosophy. Investing like this is something that only capable individuals can do, but I don't have that ability, and I haven't seen such abilities in others either. The important thing is that as the size of the assets I manage increases, it seems right to avoid such investments. This is because you can't sell them. For those with a certain level of asset size, investing in small stocks requires extreme caution. For example, we had the Youngpoong paper incident last year, which showed that even when liquidity in the stock market seems good, it can suddenly dry up, especially for individual stocks. This can be very severe. So I want to emphasize that if you are investing in individual stocks, and your scale reaches several hundred million or even billions, it can become truly risky. From my experience as a client, I find that it generally tends to be a no-brainer. It's comfortable, but even when the stock market is experiencing slight adjustments, like recently, it's not a drastic correction. It's more like a sideways movement.
But how is this even possible? From what I've seen, this is really great because I don't have to worry about anything. It just operates on its own, and When a signal comes, I just have to press a button and it manages everything by itself. So could you explain how this is possible?
Yes, our portfolio and strategies are quite simple, but people struggle to implement these simple strategies due to psychological factors. The strategies are all publicly available, so we don't operate based on any special know-how. First, the simplest approach is to find assets that move in the opposite direction of our South Korean stocks. The most representative asset that moves contrary to South Korean stocks is the US dollar. And gold. Gold is really great, isn't it? These days, gold is at its peak. It's already evident that those who know are aware that gold has a larger share than South Korean stocks. So, in our case, we maintain an appropriate allocation of about 10% to 15% in South Korean stocks, while looking for a combination of stocks or assets that are likely to adjust when South Korean stocks rise, or have the potential to increase when South Korean stocks experience significant corrections. So in our case, for example, if the proportion of South Korean stocks in the total assets is 10%, then on the opposite side, the proportion of gold would also be around 10%, or the proportions of various assets denominated in US dollars would be 20% or 30%, arranged in that manner. So, when the South Korean stock prices surged, in early June and July this year, I sold my South Korean stocks. Because the target allocation, yes, you sell that and then buy things like US Treasury bonds or gold. After holding those, if the stock market crashes again like in August, when it might drop below 2,400, then during a major stock market crash, you would sell your gold and dollars to buy South Korean stocks at a low price. Also, just recently, the exchange rate started to drop by about 20, 31 a day, right? So then you think, oh, the dollar is getting cheaper, and you would sell South Korean treasury bonds.
I have been regularly adjusting the ratios, such as buying US stocks, and as a result, I have been steadily and appropriately mixing assets that have inverse correlations. However, we cannot predict how these will move.
However, by appropriately rebalancing every time there is a movement, it creates a structure that steadily rises like a tiki-taka. For instance, when the Israel-Hamas war broke out last October, holding dollars provided significant defense. And this year, gold has offered substantial protection. Since no one really knows where the defense will come from in such situations, it is essential to hold assets that have defensive capabilities during these crises. In June and July of this year, during good market conditions, I often hear questions about why I hold on to certain assets. No, what is gold as an interest? The US dollar, we don't even know when the interest rate will change, so why are they issuing US government bonds? These are the questions people always ask. So people want to go all in on the next best asset and then manage it only to switch to another good asset later on, expecting some kind of miraculous management. If I had that ability, I wouldn't be the head of the National Pension Service. I would still be there, and we all know that such miracles don't exist. I've seen too many people pretending to be miraculous. I have seen many people strongly say that they know all the secrets of the world, and that they only need to invest this way, but I don't understand why they don't. Our strategy is very simple, right? What this means is that even if you invested on the day before, the worst market crash of the year, if an unfortunate client happened to come in, for example, 23 years ago on September 10th, 2001, just before the 9/11 attacks, it would have been almost the worst scenario. Those who come in like that end up with a loss rate of between -3% and 5%. In such a worst-case scenario, if you endure when this happens, you can recover your principal within a year, and the loss rate won't be in the tens of percent, but rather -5% or -10%. There is no goal, you see. The operator is different. My goal is to operate in such a way, in short, regardless of the situation, it has a very strong downside rigidity and tends to incur fewer losses. So if you just stay put when the market rises, the returns will be better than stocks in the long run.
That's right. We often talk about the power of compound interest.
That's right. If you don't break it, you can enjoy compound interest.
Many people are under a misconception. For example, a friend of mine had a return of -50% yesterday. To recover from a loss of -50%, you would need a return of +50%, but that doesn't actually restore the original amount. If you go from -50% to +50%, you only end up with a 75% recovery. So the most important thing is to not lose too much. In my view, this is extremely important. And this asset allocation strategy is, in a way, the king of that.
Well, I don't know about being a king, but it's something Warren Buffett always says. The first principle of investing is to not lose money. That's right. What's the second principle? It's to remember the first principle. Exactly. Even Warren Buffett, who is considered the best stock investor in the world, finds it hard to recover once he makes a mistake. We need to be cautious when we buy, just like that person's philosophy. It's not like we can study diligently for a long time like in a traditional seminar, nor do we have the extensive experience of someone who has been investing for 80 years, or the exceptional information power. It's difficult to achieve the same results as that person, yet they have averaged a return of about 15% over the past 60 years, which is remarkable. Some people might say, "Doctor, I made 10% last month." That's impressive. But it only becomes truly meaningful if you can consistently achieve 10% next month as well. Achieving 10% a month translates to 150% a year due to compounding. So why would those who can achieve such incredible results boast about their skills or share that information with others? You could just quietly delve into that strategy and become rich, but there are always claims about some strategies, like recommendations from this reading room, that supposedly have good returns. When I hear people talk about such things, I think of Warren Buffett, who has an annualized compound return of 15% and is one of the world's top 3 wealthiest individuals. I don't have that kind of ability, so my target return is 7% per year. If you believe there is a strategy that can yield 10% per month, then you should pursue it.
That's right.
We don't have that kind of ability. Instead, we are trying to make fewer mistakes. Right, it seems that we end up talking like this.
Perhaps that's why, to my knowledge, there are actually similar services available, but Prism Investment Advisory opened around March of last year.
Yes.
But already the total assets under management are...
Yes, it has exceeded 70 billion. Isn't that incredible? It's been about 2.5 years now. No, it's only been a year and a half, but especially the B2C customers have surpassed 60 billion. So, excluding the corporate funds, you have over 60 billion won, and the average assets of the clients who have signed up are around 30 to 40 million won. Please entrust it to us.
It's not small.
So, how should I express this? In our view, there are about 2,000 clients who each receive around 30 to 40 million. Most and investors tend to start by entrusting 1 million won to see how it goes. In contrast, the amounts entrusted to us are significant, and some clients reinvest their initial deposits during the year-end settlement season. So, if we have about 60 billion won, less than half of that comes from new deposits, while most of it is from additional contributions. Since the stock market is performing well, and I am managing it effectively, there are also clients who withdraw their funds. While that is unavoidable, there are definitely clients who express dissatisfaction with the returns and decide to withdraw their money. If we say that we have 60 billion won in assets for individual clients, then more than 30 billion won comes from additional contributions.
So I heard that there are ways for those using the Prism service to effectively allocate assets while also minimizing taxes and growing their investments in the stock market.